the economy with the printing press.
Okay.
All right.
Timer off.
Money Show is delighted to welcome Peter Schiff, one of the few widely known economists and investment professionals to have spoken about the financial crisis before it even began. Peter, thank you for being here to kick off the event this morning. We look forward to your insights.
Oh, thanks for having me here at virtual Las Vegas for the Money Show. I was thinking just before I started to talk here about how many more money shows we're actually going to have. I'm not really sure. I think we're coming maybe towards the end of the cycle here, because I think the money that most people have, or at least what they think is money, isn't going to be money much longer. And so I'm not really sure how many Americans are going to have any wealth that they're looking to invest. I think most Americans are going to be struggling to survive, let alone trying to figure out where to invest money that has practically no value. The crisis that we are headed for now is really unprecedented in the world. Not that there haven't been countries that have been wiped out. I mean, we've seen hyperinflations, we've seen currencies destroyed, we've seen people impoverished. I mean, that's not new. This has been happening for a long time. What's really new is the scale. I mean, we're about to see a loss of wealth that's really unprecedented in the scale. How many people are going to lose money, or wealth rather, and how much they're going to lose. That's what's really unprecedented. And of course, it hasn't really happened in a nation as large as the United States. It hasn't happened with a nation that is issuing the world's reserve currency. So the bankruptcy of America, the impoverishment of America, a hyperinflation in America has profound implications far beyond the United States. So this is really going to be a global event, even though the bulk of the pain is going to be concentrated in America, and it's going to be experienced by Americans. And, it's not COVID. I mean, COVID-19 is not the problem. I mean, it's one of a number of problems, but it's not why we're about to go through this massive economic collapse. But it is the monetary and fiscal policy response to COVID-19, right? The government's cure is what's going to kill the economy, not the disease. And in fact, it's not just the mistakes that the government has made since COVID. It's all the mistakes that were made before COVID, right? The government just didn't start making these mistakes. The Federal Reserve didn't start QE with COVID. It started it a long time ago. This 0% interest rate policy wasn't invented because of COVID. It predated COVID. It was just resurrected on a much grander scale, which again is what I have been telling Money Show audiences for years. Contrary to a popular belief, everything the US government did in the aftermath of the 2008 financial crisis was a mistake. All the monetary policy was wrong. All the fiscal policy was wrong. As a consequence, we never actually recovered from that crisis. We simply made all of the problems that caused that crisis worse. And of course, the crisis was caused by the Fed, by the government, using the same policies that they used to respond to the crisis. Only the mistakes they made after 2008 were far bigger than the mistakes they made before 2008. And therefore, the bubble that they blew up was far bigger. And the collapse, now that that bubble is popped, is going to be catastrophic, right? When the 2008 bubble popped, we had the worst crisis since the Great Depression. This crisis will be worse than the Great Depression, much worse. And unlike the Great Depression, when we were still on a gold standard, money actually gained value. So if you weren't in the stock market, if you weren't in the real estate market, you gained purchasing power. Assets got cheaper for you. The cost of living went down. Americans are not going to be that lucky this time. Everyone's going to get wiped out. People who don't have any money invested in the stock market are going to get wiped out because the dollar is going to get wiped out. We should have had a U.S. currency crisis years ago. When I wrote my book, Crash Proof, back in 2005 and 6, and it came out in 2007, and when I was going to the money shows back then, warning about the housing bubble that the Fed had inflated and about the financial crisis that was going to hit when that bubble popped, and the worst recession that we were going to get since the Depression, 10% unemployment, trillion-dollar deficits, the bankruptcy of Fannie and Freddie, everything that happened in '08, I was warning about for many, many years before '08. But what I expected to happen as a result of '08, I knew that the government would double down on its failed policy. I knew the Fed would slash rates. I knew they would start printing money again, and they would try to reflate the bubbles. My feeling at the time was that they would fail in their attempts to reflate the bubbles, and instead the dollar would succumb to these mistakes, and we would have a big drop in the dollar, and that would, relapse into a worse crisis. What I got wrong is that the world actually was fooled by our monetary magic, and the Fed was able to succeed where I thought they would fail. They did reflate a bigger bubble than the one that popped in 2008, but they're not going to be able to repeat the trick again. It is impossible to reflate a bubble bigger than the one that just popped. And so this is it. It's not three strikes or third time's the charm for the Fed, because they did it before, after the NASDAQ bubble popped. It's going to be three strikes and you're out if you are still in the dollar. The myth is that the U.S. economy was strong before COVID. It wasn't strong at all. It was the weakest it had ever been. It was the biggest bubble that had ever existed. That is why the economy imploded so quickly as a result of the COVID-19 lockdowns, right? Because we were so vulnerable. We had nothing saved for a rainy day. And it didn't just rain, it poured. And the air started to come out of this everything bubble in the fourth quarter of 2018. So we were already going to have this crisis. COVID just accelerated and is making it worse, but it was already inevitable. The air started coming out. The markets imploded in the fourth quarter of 2018. And the Federal Reserve, as I forecast at many money shows and on television, the Fed aborted its feigned attempt to normalize interest rates and shrink its balance sheet, something that I said from the beginning could never happen. And one of the only people that made that forecast. The Fed reversed course and began cutting rates in early 2019, and they went back to quantitative easing. Now, they didn't officially admit it was quantitative easing. They lied about what they were doing, but it was quantitative easing. Well, since then, since COVID, they've dropped the pretense. They now admit that they're doing QE. In fact, they admit that it's QE infinity, which again is another forecast that I got right long before QE4 started. Even before we ended QE3, I said QE4 would be bigger than QE1, 2, and 3 combined. And that prediction has already come true because the Fed has already done more quantitative easing since COVID than in all of the years following the 2008 financial crisis. And the scale of money printing is unprecedented. The deficits are through the roof. We're running now $3-4 trillion deficits. The government is spending more money than ever before, where most of it is being conjured into existence by the Federal Reserve. The U.S. government is now spending more than 60 cents, or more than 60 cents out of every dollar that the U.S. government is spending is being printed. So the Federal Reserve is printing more money for the government to spend than the U.S. government is collecting in taxes. Now, you have to realize that doesn't mean that all of this government is free, that we've dramatically increased government, right? Donald Trump has increased the size of government more than any prior president. I mean, forget about Roosevelt or Lyndon Johnson. Trump is the biggest spender of all time, the biggest borrower of all time, and therefore he is the biggest taxer of all time, because every dime the U.S. government spends is a dime of taxes, whether they want to be honest about it or not, because government spending isn't free, right? It's paid for by Americans one way or another. And if Trump and Congress don't have the guts to be honest with the American public and give them an actual bill for this unprecedented spending orgy, right? They're just going to have the Fed print up the money. That doesn't mean we escape the bill. It just means we pay the tax through a different mechanism. And that mechanism is called inflation. And in fact, I just put up a video on Twitter and my Instagram page yesterday of Warren Buffett last year correctly defining inflation as a tax. It is an expansion of the money supply. Buffett said it's the cruelest tax of all. that fewer than 1 in a million even understand, which is true, and that's by design. The government has led a propaganda effort to confuse people as to what inflation is, but it's an expansion of the money supply. It is a tax. It is a tax on savers, on people that own dollars. So there's two ways the government can pay for its spending. It can collect taxes legitimately by taking your money, or it can do it illegitimately by taking your purchasing power. So let's say the government takes your money. They take money from you and they give it to somebody else. Now somebody else can spend it and you can't, right? You see that loss of purchasing power because money is actually taken away from you. But the other way they do it surreptitiously is they don't take anything away from you. They just print money up out of thin air and they give that money to somebody else. And now that somebody else spends something. But the amount of goods and services to buy hasn't expanded. The government doesn't print purchasing power. It just prints claims to the existing production supply of goods and services. So what happens is the people who get the new money go out and spend it, and that bids up prices. And so what happens is prices go up, and so now you have less, you can buy less stuff. Not because you have less money, but because your money is less valuable and prices go up. So we are about to experience in America inflation on an unprecedented scale in this country. We're going to see the cost of living skyrocket, and it's going to happen very, very quickly. It's going to hit people like a ton of bricks, and they're not going to see this coming, right? More people are going to be blindsided by the dollar crisis than by the financial crisis. And the dollar crisis is much worse than a financial crisis, because when we had the financial crisis, the Fed was able to print dollars to bail everybody out. Well, when you have a dollar crisis, that doesn't matter anymore. You can't print dollars because nobody wants them. And that means it's not just a dollar crisis, it is a sovereign debt crisis. It's not just subprime mortgages that are going to go bad. It is U.S. treasuries that are going to go bad. And of course, if U.S. treasuries are bad, so are all debts denominated in U.S. dollars. Corporate bonds, muni bonds, if you've got a pension, if you've got an annuity, you're going to get wiped out. The money that you receive is going to buy very little and potentially nothing at all. Because the only way the Federal Reserve is going to prevent the dollar from becoming monopoly money is going to be to finally do the right thing, something that it has resisted doing the entire time. The last person who did the right thing is no longer alive, Paul Volcker in 1980. The dollar was collapsing in the 1970s. Why? Because we printed a lot of money in the 1960s, and then we went off the gold standard in 1971, and the dollar tanked. It lost about 2/3 of its value against other fiat currencies like the Deutschmark, the Swiss franc, the Japanese yen, and gold went up 20-fold from $35 an ounce to over 800. Oil went up 10-fold. The dollar was going to get killed back then, but Volcker allowed interest rates to rise to 20%, and that put a floor beneath the dollar. That's what it took to rebuild confidence in a dollar that was no longer backed by gold, that was no longer as good as gold. Well, back then, America was the world's biggest creditor nation. We were the world's biggest surplus nation in trade. We had a lot of manufacturing. We had a high savings rate. And Ronald Reagan was president. That is the opposite of the situation that we're entering into now, where I think we're going to have a Democrat president, but it really doesn't even matter because Trump is like a Democrat, except he's not as bad as the current crop of Democrats. But I think we're going to have a real Democrat instead of a pretend Republican. And a Democratic Senate. But interest rates can't go up to 20%. They're trapped at zero. We can't even afford 2%, let alone 20%, based on the enormity of the amount of debt that we have now. But in order to stop the dollar from collapsing, the Federal Reserve has to let market interest rates rise. Who knows how high they would go? I think the rate would actually have to go above 20%. But here's the problem. We can't even afford a fraction of that. So if the Federal Reserve does the right thing to prevent the dollar from collapsing, the U.S. government will have to default on its treasury bonds. The majority of debtors will end up defaulting, not just the U.S. government. And the government won't just default on its treasury bonds. It will default on its pension obligations. It will default on Social Security benefits, Medicare benefits, on guaranteed loans, on the guaranteed pensions and bank accounts. All these empty promises are going to be exposed if the Fed does the right thing. But again, what's the odds that they do the right thing, given how painful doing the right thing is going to be? So instead of doing the right thing, they will double down on doing the wrong thing or triple down on it, and they are not going to let interest rates go up. So the dollar is going to fall through the floor, and inflation is going to ravage the United States, because what happened in 1971 is America went off the gold standard, but the world did not go off the dollar standard. What's about to happen is the world is going to go off the dollar standard and go back to the gold standard. That is where we're headed, because the system that we have now does not work. You cannot back your currency with an unbacked currency. Prior to the dollar being the reserve currency, gold was the reserve. Gold was money that backed up all currencies. America convinced the world to back their currencies with dollars because the dollar was as good as gold and was redeemable on demand in gold. And once we conned the world into holding onto our dollars and buying treasuries, we screwed them by defaulting. But they held our treasuries because they still got, 5, 6, 7% interest. And they still regarded the dollar as safe, even though it was no longer backed by anything. Well, now they don't get any interest on owning their treasuries, and they can see that we are going to print money into oblivion. This crisis is just getting started. The money printing is just getting started. As I said, the Federal Reserve now, or the government, is printing 60%, 60 cents out of every dollar spent. Soon that's going to be 80 cents out of every dollar. And the dollar is going to get destroyed, and it will no longer be the reserve currency. The world is going to remonetize gold. That's why gold is already over $2,000 an ounce. It's going much, much higher than $2,000 an ounce. And it's not just me saying that. Warren Buffett is finally voting with his feet. He is selling banks and he is buying gold stocks. We know what his position in Barrick Gold was 7 weeks ago. What we don't know is how much more he's bought in the last 7 weeks, or what other gold stocks he bought while he was doing it under the radar. But it's out in the open now. Buffett is not the last institution to buy gold stocks. He's one of the first. This is going to be a tidal wave of money moving out of U.S. dollars. The U.S. dollar index, as I'm talking, is almost ready to break through 92. This is the lowest it's been since May of 2018. The dollar is going to keep falling until it eventually collapses and we end up with this crisis. But what you have to understand is the entire American economy is built on the foundation of the dollar being the reserve currency. That is the secret sauce that makes this whole economy work. Once that is no longer the case, once the dollar is just another currency, then it's all over. Right? It's the end of the game for America, because now we can't consume unless we produce. Now we can't borrow unless we save. We've been getting a free ride on the global gravy train. Well, that train is coming to an end, and America is going to have to deal with its greatly diminished standard of living at a time where capitalism has such a black eye. And I've never seen socialism more popular with the electorate than it is right now. What's about to happen, this economic disaster of unprecedented scale, with civil unrest that's going to far exceed what we saw with the riots that we had with the Black Lives Matter. It's going to be much worse. We're going to have shortages of food that are going to be much greater than what we temporarily had when people were rushing to stock up COVID. Shortages of energy. It is going to be a very, very difficult time. And Americans, I think, are going to blame capitalism, and they are going to, entrust unprecedented amounts of power in the U.S. government. So we're not only going to lose a lot of our money, but we're going to lose most of our liberties, our individual rights. So this is going to be a very, very difficult time to be an American. But the one thing that I can try to do is at least ease the financial pain, right? Because you have a little bit of time to buy gold at $2,000. Now you might think, well, Peter, is that expensive? No, $2,000 gold is cheap. You're going to look back at $2,000 and think, gee, that was a low price. Silver is even cheaper. Silver is still below $30 an ounce. Gold and silver stocks are a bargain. And especially now that Warren Buffett has green lighted these stocks, you're going to see more institutions. So you got a Europe Pacific Capital. Here's what we're doing. And again, Window's going to shut very quickly. So don't wait, right? You got to get out of dollars. I can manage a portfolio for you of foreign stocks, foreign bonds, precious metals, gold stocks. I have individual separately managed accounts. I've got 5 mutual funds, which, by the way, you can buy any of my mutual funds on most of the discount brokerage firm platforms, or you can work with me directly at Euro Pacific Capital. You can open up an account, work with our advisors, transfer in a retirement account, an IRA. I mean, if you want to retire, this is what you have to do. Otherwise, your money's going to retire and you'll never retire. So you gotta be proactive and recognize that you've already pressed your luck. The fact that we've gone this far without the dollar collapsing, it can collapse any day. It is like literally a bomb, right? And it is going to go off. We just don't know how long the fuse is. Is that my 20 minutes?
No, you can keep going. If you want to do 5 more, we can leave time for a Q&A.
Oh, I don't know. How much time do I have? 20 minutes or 30?
You have 10 minutes left.
Oh, it's confusing. Okay, good. I have 10 more minutes. Yeah. So the key is going to be to get money out of US dollars, right? Because it's the dollar that's going to be collapsing, right? If the debts can't be repaid, they're repudiated. They're repudiated through inflation. So that means that if you have liabilities in dollars, well, those liabilities are extinguished, right? So the US government doesn't really owe the national debt anymore because it doesn't matter because the money's been wiped out. But the problem is when you wipe out the student loans and the credit card debt and the auto loans, you also wipe out the assets. And the people who are at the money show are on the losing side of this transaction. You've got assets that are about to get wiped out. And it's not just your own assets. Let's say you have an insurance policy. Well, now your insurance company is broke because the insurance company owned the assets that now have no value. So how are they going to pay claims? They can't, right? All the financial wealth gets wiped out. The people who are not wiped out are the people who saw the writing on the wall in advance and got out of these paper assets before they collapse. And if you think, well, I'm in US stocks, that'll be okay. Look, being in overpriced US stocks is better than being in dollars in bonds, right? The people in bonds could lose everything. If you have good companies, you may not lose everything, but you still could lose a lot. You have to realize that the American economy in the future is going to be extremely destructive to the value of US companies. Not only are taxes about to go up, corporate taxes, but the tax on dividends and capital gains is going to go up. So you remember, corporations have a double taxation. And so to really value a corporation, you have to look at its ability to pay after-tax earnings. And you have to take into account taxes on both levels, at the corporate side and at the shareholder side. And since both are going to go up, we're going to see at least a 60% increase, if not more, in corporate taxes next year. And that's going to destroy a substantial percentage of the value of US stocks in real terms. And so US stocks are not going to represent a good place to hide. And of course, they're already so overpriced, right? Their earnings are going to evaporate. The only thing US stocks have got going for them is their debt is going to get wiped out, right? So but they're not going to have the revenue because their customers are also going to get wiped out. So you can't really hide in US stocks. You can't really hide in US real estate. You've got to be in foreign stocks. You've got to be in companies whose customers are not in America. Because if your customers are broke, then what good is your business? And you don't want to be within the regulatory reach of the US government that is going to be treating corporate America like a social experiment, right? New regulations are going to be coming to US companies that basically put the shareholder in the back seat. US companies are going to be required to prioritize their workers, their stakeholders, and they're going to have to start hiring people not based on their quality, how good they can do the job, but they have to make sure they're the right race, they're the right gender, they're the right sexual orientation, the right age. It's all going to be about making sure that we have this diverse workforce, not making sure that we have a good workforce or a productive workforce. So this is just a disaster on so many different fronts. And it's going to be so much worse than anything that I thought was going to happen when I was writing my original book. Because had we had the dollar crisis, 8 years ago, it wouldn't have been as bad. I mean, it would have been terrible, but it wouldn't have been as awful as it's about to be. And the politics wouldn't have gotten this bad, and Trump never probably wouldn't have been in office. And the problem with Trump is that he is going to further tarnish. He's going to do more to discredit capitalism than George Bush did, because the last financial crisis happened when Bush was president. This one is happening when Trump is president. and it's going to enable the left that is now far more socialist than it was when Obama was president to further put the blame on capitalism. When this crisis had nothing to do with capitalism, capitalism would have prevented the crisis. It was socialism, central planning. And of course, now even the people in the Trump administration look at Larry Kudlow, whose motto used to be free market capitalism is the best path to prosperity. Now that he's working for government and advising Donald Trump, he no longer believes that. He now believes that central government planning and socialism is the best path to prosperity. He came out and said that. He said that the government needs to borrow heavily now and invest in the economy. So he doesn't believe the private sector is the engine of economic growth. He believes the government is the engine of growth. He believes government bureaucrats are smarter than the free market and they know how to plan, and that printing money is better than earning money. So everybody has now accepted the false doctrine. I keep hearing, we're all socialists now. That's the problem. The Republicans have been socialists for a long time, but in the process, they've given capitalism such a black eye that I don't think it can recover. So I think we're in the worst possible position that we could be in heading into this crisis. And I can't stress enough how important it is that people act. Don't even wait till tomorrow. Start today. Start getting out of dollars, out of U.S. stocks, getting into foreign stocks, into precious metals, into mining stocks. I mean, if you want to own stocks that can go up 10 times, 20 times, 100 times, those are the stocks that can do it. Anyway, I will open it up to questions if that's something we can do.
Yeah, absolutely. There are a lot of questions here for you. So let's see. Cryptos is a way of avoiding the US dollar. Is this a way of forcing alternative currencies?
Well, I think cryptos are just a speculative asset that has been pumped up and is benefiting from the idea that the dollar is going to go down and gold's going up. But, I've said this many times, it's fool's gold. It is an accident waiting to happen. The people who are in cryptocurrencies will be wiped out. They are fiat cryptocurrencies. They're no better. In fact, they're actually worse than all the other fiat currencies that are out there. I think it's a giant, a pyramid scheme. If you own any of these things, you should get out. And if you don't own them, don't buy them. All you are is going to be a bag holder. And there's going to be a lot of tears. A lot of very disappointed millennials are going to be broke because they put their faith in fool's gold instead of buying the real thing.
Thank you. Next question. I hear you saying that the U.S. will have issues, but since we are so much of the world economy, won't the whole world reset with us?
It's going to reset, but it's going to reset in a positive way. Remember, I said that America has enjoyed a tremendous subsidy because of the dollar's role as the reserve currency. So Americans collectively live beyond their means. And that means the rest of the world collectively lives beneath its means to make that possible. So America gets to consume stuff that it didn't produce. The rest of the world produces a lot of stuff and it doesn't get to consume it. America borrows all this money, but doesn't have to save it. The rest of the world saves all this money, but doesn't get the benefit of those savings because they loan the savings to the United States. So it's really going to be like a seesaw. As America goes down, that will lift the rest of the world up. Our loss is their gain, right? So America is the nation that has benefited the most from this fiat monetary system, and it has the most to lose when it comes to an end and we go back to a real monetary system based on gold. So yes, it's going to be very global disruptive. I think the economies that will benefit the most are the emerging markets, which is why you should have good exposure to the emerging market economies and own emerging market stocks, which we do. I have an emerging market fund that we manage. That is going to be where huge gains are made. These emerging market stocks are very, very inexpensive, not only in real terms, but in relative terms compared to the US. And one of the reasons that they've been so weak has been the false perception that the dollar would keep rising. Once the speculators are proven wrong and the dollar collapses instead of going up, that is a giant burden removed from these emerging market economies. It wipes out their dollar debt. It frees up their governments. They no longer have the inflationary pressures, the interest rate pressures. So we're going to see some economic booms outside the United States as we see the mother of all busts happening inside the United States.
Thank you, Peter. We see this question a lot, and here it is again. So are you asserting buying gold stocks or ETFs or the real metal?
Well, look, I like buying real gold, and Schiff Gold is my company, and you could buy gold and silver from me. You don't buy numismatics, don't buy rare coins. That's all a scam for the salesman to make more money. You want to buy bullion, bars, and coins as close to the spot price as you can. You don't want to be a collector. You want to be an investor, a saver. But you can still buy the ETFs as well if you have an IRA or something and you don't want to deal with having physical gold. I mean, we can do physical gold for you in an IRA, just a little bit more expensive. But look, these are third-party custodians. I mean, so what happens if they don't actually have the gold? That's the risk. You have counterparty risk. And there are storage fees. The storage fees are not that high, though. They're reasonable. But, so they're okay. But gold stocks is a different animal. See, that's what Warren Buffett bought. He didn't buy physical gold. He bought gold mining stocks. Now, of course, when you buy a gold mining stocks, you're buying the gold that they have in the ground. So you have to be bullish on gold to invest in a gold mining stock, because when you own a company, you own their inventory, which in this case is all the unmined gold. But I think there's a huge leverage play. I think if the gold price doubles, gold stocks can go up 5 to 10x. If gold price triples, gold stocks can go up 10 to 20x. I think there's tremendous leverage to the price of gold built into these stocks. So physical gold is to preserve your wealth and not to go broke. Gold stocks is a levered bet on gold that can make you rich. And so most of my personal portfolio is in mining stocks, right? And so I'm trying to make a lot of money off this crisis, not just preserve what I have. I mean, yes, I have physical gold and I have a lot of conservative assets. So even if all of my gold stocks become worthless, I'm fine on my other assets. But I don't think that's going to happen. I think the gold stocks will go up, and I think I'll end up amassing a tremendous amount of wealth as a result of owning these stocks. And I believe the same thing will happen to other people who own these stocks as well. It's not too late to buy them. It's not even close to being too late.
That's great advice. Thank you so much. And for the final question, I hear you have a bank becoming available to Americans. When is that coming?
Yeah, the regulations on offshore banks are really, really brutal. And so everything that you want to do there just takes forever thanks to government. So I was hoping that maybe by next year we could open up the bank to Americans. I don't know. Hopefully that will be the case. And I have other programs I want to launch with gold and my new Visa card and different ways that, because my bank treats gold as money. It looks at gold like the euro or the Swiss franc or the pound or the dollar, and it allows all sorts of functionality with gold. Again, the biggest impediment to any of these kind of innovations is always government. Government tries to slow you down. They claim it's because of money laundering, terrorists and drug dealers. It's all a bunch of BS. They're trying to maintain their power. They're trying to crack down on, tax evasion. But more importantly is they don't want competition in money. And gold is the competition that they fear most. So it is an uphill battle, but hopefully we'll be able to, fully roll out what I want to do with my bank. But in the meantime, just get out of dollars. Don't wait for my bank. You can work with me at Euro Pacific Capital. If you're not in the United States, you can work with me at Euro Pacific Asset Management. We finally got approved. Hallelujah. We got approved by IROC in Canada. So we're now a registered RIA in Canada. We're registered in all the provinces up there. It took forever to get through that, bureaucratic, spider web, but we finally did it. But we're working with clients all around the world through Euro Pacific Asset Management in Puerto Rico. So go directly to my website there. If you're foreign, europacificfunds.com. If you're domestic, you can see the URL, europac.com on my shoulder. Make sure to follow me on social media. I'm on YouTube. My YouTube channel, The Schiff Report, now has over 365,000 subscribers. Subscribe to that. You can also listen to the podcast on Schiff Radio, iTunes, Stitcher, all these places. I now have over 285,000 Twitter followers. So follow me on Twitter. I just joined Instagram last month. Not quite 50,000 people follow me there, but it's brand new. I intend to try to use that platform a lot, particularly to get to the younger audience, but follow me there. Facebook, whatever I'm doing, because the media, the conventional financial media is putting out a bunch of nonsense, a bunch of crap, a bunch of government propaganda regurgitated. If you really want to know what's going on, if you want the real story, as this crisis unfolds before the blind eyes of the conventional media, then you got to be exposed to me. You got to listen to my podcast on a regular basis, read the stuff I write, and invest according to the principles that I'm laying out.
Awesome. Thank you. That's all we have time for, but I got to say that was a fantastic presentation. We really appreciate you sharing your insights with us today.
Okay, sure thing. And I'm doing the debate tomorrow with Stephen Moore, so that should be fun.
That's definitely going to be awesome.
All right.
Yep. You have a great day. Okay.
Bye-bye.
Thanks. And thank you to everyone for joining us this morning. Remember to visit the virtual hall where you can see live Q&A with experts, prize drawings, exclusive offers from exhibitors and sponsors, and more. You will also find a booth for Euro Pacific Capital if you'd like to chat with Peter Schiff. You can reach him directly there. And as a friendly reminder, if you missed a session or would like to replay sessions on demand, you can do so by visiting virtualpass.moneyshow.com. Your virtual pass includes video and audio recordings of 30+ hours of timely presentations from Money Show's virtual event, plus info pack slide presentations from our speakers, so you can review these key points at your leisure. We hope you enjoy the rest of the show and have a great day.